The biggest illusion around communication is that it actually took place. So the key thing is, if you don't know the owner's business plan, if you don't really know it deep down, because sometimes you can even have it on paper and have a weekly call, but or for whatever reason, that communication didn't really happen. And so you have to, first of all, get on the exact same page as the owner, because you're their agent at the end of the day. You have to execute what they want, and you can give advice and tell them, hey, do this versus that, but you really have to let them be in the driver's seat to the extent that they want to.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder, and CEO of Zana Investments. And on today's show, we have with us Dan French. Dan is the managing director of ATX Acquisitions. He has helped orchestrate deals totaling over $2 billion in assets under management, delivering remarkable returns exceeding over $1 billion to investors. Dan also happens to be the CEO of ResProp, a property management firm where he has overseen the operation of more than 15,000 units. Dan, welcome to the show.
Tim, thanks for having me on, man. I'm a big fan of the podcast and excited to get into it.
Yeah, and we're glad to have you. So, Dan, I have to tell you, I am excited to have you on, specifically because you are from the property management side of things. And it's that view that we rarely get to see. We have plenty of syndicators on the show, CPAs, but rarely do we get property management and transparency. You are property manager for one of the properties that I'm a general partner on. I won't show any favoritism, but no, I'm excited to get your honest opinion on some stuff. Before we get into all of that stuff, why don't you get into how you got started in real estate and how you got to where you are today?
Yeah, I'd be happy to. It's a long journey. And so it started 20 years ago, and I was basically fresh out of undergrad, about a year out, and I was chasing a career in public service. That's what I felt called to do. And at that point, you served in the military, and thank you for your service, man. So you guys are the reason why we can do what we do as in a thriving society, capitalist society. It's wonderful. Appreciate you guys and what you've given to us. But so for me, a lot of my friends went to the military after 9/11, right? Mm-hmm. And instead, I didn't really felt called to do that, but I did feel called to do something that was community service oriented. And my dad also happened to pass away. I found myself back in my hometown. He was a great example to me of someone who was very active in our local community in recreation type programs, never in public service that he was doing in terms of elected office. But I started pursuing elected office, and I felt passionately that I can help people that way. And so I did that, and I became an elected official for 7 years. I was elected in my hometown, starting off as a councilman, then becoming a town supervisor, as like a mayor. But I quickly realized I always had it in my heart that I wanted to have a big family. And I thank God that actually I have that big family now. By my standard, it's big. I know some people with 8 or 9 kids, but I have 4 kids, and I was gunning for 4 or 5 kids. And I knew that being a public servant was never going to really generate like true wealth. I would maybe keep the lights on, and that was about it. So when my business partner, who was still my business partner, still 20 years ago is when we started, but so he approached me all that time ago, still in business with the same person. His name is Pete Rex, and someone who I was fortunate to grow up with him since the time I was 7. So him and his brother approached me. I became basically their second partner. So we had a small partnership, and we started buying 2-unit buildings and 4-unit buildings. That's how it all started. It was 04, 05. We thought we were really on top of the world, very smart guys, of course. We own all these buildings. And quickly, the great financial crisis hit us extremely hard. And so it was years of working things out with the banks and restructuring things. And through grit and determination and some financial savvy, we got through all of that, repositioned those assets, sold a lot of them, avoided bankruptcy, and a lot of the stuff that impacted other people. And then by 2011, I ran for a higher office. I lost for that office, and I called up my partner, Pete, and he was launching a much bigger platform. This is the one that bought $2 billion in assets between 2011 and 2019. I joined very early stage with him. So that's the arc of my career, and that's the reason why I started, was grow some wealth. And then it became more like a missionary thing. Like, I can serve a lot more people. There's residents, there's investors, there's teammates. It's an amazing gift to be in real estate. So let me pause there, and that was the genesis.
Yeah, that's great. And I think a lot of the steps on your journey will resonate with a lot of people, right? Mm-hmm. Anyone, like you said, in public service, in the military, government work, those can pay well or well enough, like you said, to provide for your family, keep the lights on, but they'll never generate that that financial freedom that I think a lot of people are
Right.
looking for. And I think that's how people find themselves eyeing real estate, because it's one of the only things outside of the stock market that people talk a lot about in terms of generating wealth and tax benefits and stuff like that. And then I think also, like you said, starting with those 2 to 4 units, that's where most people get started in real estate, if not with single family, right? Their own property, maybe renting that out, your accidental
Yeah.
landlords, stuff like that. I find it very interesting and inspiring that you were able to get started early on, because 2005 timeframe, I had just bought my first house and I was pretty proud of myself just for doing that. Now
Mm.
looking back, I wish I had bought like a 4 unit with my VA loan with 0% down. Hindsight
Yeah.
is 2020 when you figure out all these tips and tricks after the fact. But
Right.
having done that and then been able to make your way through the financial crisis without it being a crisis for you, talk a little bit more about that and the lessons that you learned coming out on the other side, which I'm sure you didn't come out completely unscathed, but you did come out of it not destroyed like most people did.
Yeah. One reflection I heard someone say this recently is, man, when you and I got started about actually owning real estate in '05, let's say you for your single family home and then maybe some investments later, and me for investments, the things available to us were like, you'd have to go to a library and find some things, right? There wasn't a lot online. There's wonderful people like you sharing knowledge on your podcast, basically for free, just as a passion, and also great books. I see some of them behind you. Rich Dad, Poor Dad was out, but yeah, that's not really a toolbox. It just says go do something and think this way. It doesn't
Right.
really say, like the best ever book says, that's also behind you, hey, here's an actual playbook. You can do this. So for us, like for me at least, it was like I could buy Real Estate for Dummies at Barnes and Noble, or I could just go learn as I do. And I don't know, that's how we did it. Of course, we read what we could, but it was experiential and you take some hard knocks. So yeah, the way we got through that was I would give a lot of credit to Pete, my partner. He was very tenacious when it came
Mm.
to being very good about restructuring things. And it just has a great mind for this. And what people might forget is like a lot of the banks that had our notes, they were just going out of business, which is why I think this is such a different crisis now. And today, the climate that we're speaking about today is 2024. It's definitely not 2007 and 8, because at that point, whole investment banks were going out of business. Obviously, all the subprime banks just completely belly up. I remember being on the phone call for hours at a time, just trying to find out who had my note, like who owned because it had been bought up by private equity and a different bank bought the assets of this other bank that went belly up. Wild times, just hours and hours of doing this and unwinding it. And of course, operating as we're going and paying as much as we could to keep the mortgages somewhat afloat, if you will. And then just have to restructure it. But many of them were open to it because they had paid pennies on the dollar for that bank's balance sheet. So anything they get is better than someone who just throws in the towel. Does that make sense? So we
Yeah,
were the fighter.
yeah, exactly. And that's what I was going to say. I have to imagine that they'd be open to negotiation if it's something versus nothing, which is what they were getting
Yeah.
from a lot of homeowners, right? If not
Yeah.
multifamily owners. And then the other piece that you talked about is you and your partner being tenacious. And a lot of times that's like the single distinguishing feature between who survives and who doesn't. They just keep pushing through, trying to find solutions. Even if they
Yeah.
don't know exactly where to look, they just keep looking until they find it. Whereas the other people, they just don't have that will, that drive. And they're just like, you know what? I don't need this. And they just
Mhm.
let it go, drop the keys off, and just walk away.
Pete has one of his models, Invictus. So basically, like in the Roman context, I think people would call Caesar Invictus. He's unconquerable. Like you can go up against him, you might win a skirmish here and there, but you will never defeat him. So just having an Invictus mentality of just we're never going to we might have some tough days and maybe even a couple tough years, but in the long run, we're going to be fine. We're going to win.
Yeah, I love that mentality. I'm a big fan of stoicism. So the
Mhm.
idea that the obstacle is the way, like
Mhm.
you may complain about all these challenges, but in the end, that's going to be the thing that makes you successful in the long run because it made you stronger, made you find solutions to problems,
For
etc.
sure.
All right, let's move forward a little bit and talk to me about how that turned into, you talked about your 2 to 4 unit properties. what was the next step in that genesis? And then we'll get into how you got into the property management side of things.
Yeah. So Pete, my partner, he got out of Harvard Law School in 2010, and but he basically scoured the country just from a data standpoint and thinking about what is a really good contrarian play, because that was a great time to do a contrarian move, right? Just even being active in that time frame, 2010 and all the way till 2015, it was more contrarian. It was very quiet. It became exceedingly more frothy as we went year by year, more players entered. But so his bet was that Florida, in particular, to begin with, would just really rage back. And it was a thematic bet based on business-friendly environment, a regulatory environment that encouraged business, and no state income tax. We felt it was overblown to say, oh, the state's tourism-focused. We thought it was more dynamic than that. And that all turned out to be true, right? So that was a wonderful contrarian long-term mindset. That's really how he founded the company that bought $2 billion. So then quickly from Florida, we started investing in Texas. I think our first Austin deal was 2013. And so we really bet on Texas, specifically Austin, and a little bit in DFW, a little bit in Houston, and one or two deals in San Antonio. It was a great basis play. A lot of these were distressed, both financially and physically distressed, especially in Florida. It was neighborhoods that were decimated. And we brought these deals back to life. And we just kept churning that, built it a vertically integrated shop. So I was able to do all the property management, construction management, and over time bought 17,000 apartments. Or over time, a little bit better B to B plus instead of some of the stuff in the early days was like C class product, taking them over from banks. So in our DNA, we know how to do all the really heavy, deep turnaround stuff. But then we also know how to do lease ups. We've done a couple of those, and many of them as ResProp, right? We serve all kinds of owners as ResProp management, including student housing, including affordable, including lease ups, including BTR, and obviously value add, because we know that very well. So that's how that all went down. And I was just very, very blessed to join Pete at a wonderful time where the business was like before scaling. And then by 2016, I became CEO of that firm. And he was really, I guess we would say, executive chairman. He's still involved in strategy and investment decision making, but the day-to-day ops would be left to a leadership team.
Yeah, and I have to say, I wish I had the crystal ball that you guys had back then, because you made some really smart decisions, obviously, again, in hindsight, when it comes to Florida, Texas. I think it made sense back then. Maybe the economies weren't as diversified back then as they are now. You could say that about markets like Orlando, Tampa. Back then, if you talked about Orlando, it was like you said, oh, it's just tourism. It's a one-trick pony. That is not the case anymore, because, frankly, so many old people wound up moving to the Orlando area that they're like, hey, we're going to turn into a medical city. And that's a huge part of how they're selling themselves, in addition to, of course, all the tourism stuff. And then you have a place like Tampa, which, again, it was nice, but there was no buzz until company headquarters started moving there. And they're like, hey, we're living here. And their employees wanted to live there. And it's tax-free. And so all these things started piling on each other. And I don't need to tell you, during COVID, all that stuff got just supercharged. So you guys were in a very enviable position, as was anyone else who already owned properties in those markets before that rocket ship took off.
Yeah, 100%. Yeah, you're making great points, and I totally agree. And it's, I lived there for 6 years, and when I got there, it was more of a sleepy town. And now when I go back, I'm like, whoa, there's a lot of new stuff here. It's really great to see, and it shows you with good policy and good, because I do think the state economy, like the policies that they have there, really encourage business. And you see now trillions of dollars of wealth too, because of all these old people are moving, and they have a lot of money for retirement, right? And so they're bringing trillions of dollars of wealth from high tax states, and some of that's going to trickle into the economy for sure. They're spending their money, and they're investing as well into these giant economies.
Yep. And so it sounds like, the experience that you guys had with all your acquisitions, especially, in different asset types, or asset classes, I should say, from your C class to your B class, all of that was your schooling for better property management, right? You learned by doing, and then that way, when you became a property manager, you recognize both the problems and the potential solutions. Is that accurate?
Yeah, definitely. Like I said, certain things I do believe get baked into a company's DNA based on some of their founding and how they found market and found success. And so for us, it was always what we say, like find a way or make one, or for WOMO, find a way or make one. And you probably have heard about this dealing with our team, but that's the kind of people that we get. And I think that's a secret sauce of property management, because a lot of groups that are on a product in core locations, especially during the boom times when it's like shooting fish in a barrel, trying to get renters in some of these places. Like it's really easy. They have a marketing program, and I'm not trying to take anything away from groups, but that's an easier playbook. And where I think we've excelled and always excel, I think we will excel into the future, I should say, is the spots where it gets a little dicey, like when COVID happened. I think our team
Mhm.
really accelerated during COVID, and we found we grew tremendously during COVID because people noticed that we were not going to give up. Every single day, we're going to go fight for the owner. And a lot of other groups were like locking offices and hiding behind desks, and you just couldn't do that. You were essential workers, and you had to stay alive and fight for the owner, because then we're fighting for our business too. So that mentality is baked in so much into our DNA of our team. And we've also done a good job keeping our core team together. Like people have been around with each other for 10, 12 years now. Many of them, the core people that are very important to the business, 5 years, 6 years, seven, eight. And we've homegrown a lot of talent. So
Ye-
anyway, I
Yeah.
think that's some of the, yeah.
And I think it's a matter of seeing all those different challenges too. My property, seeing all those different challenges. Right. This was a property that was out to down to 0% occupancy and said we're
Mhm.
going to make this market just slightly different, but we did that so that we could renovate the entire thing and then start leasing up building by building as it became available. But people may not think about what a huge lift that is to go from
Mhm.
0% occupancy. It's akin to a brand new build, right? In terms
Yes.
of that heavy lift. And that's very property management intensive, especially when the property management company is overseeing the construction, the
Mhm.
renovation associated with that property. Talk to me a little bit about what that looks like for you guys and how you have to have your team built out in order to support something like that, where you're not just looking at leasing, right? You don't just have a couple of folks sitting behind a desk,
Yeah.
but you have a whole team of people so that you can do this full service model for folks that are doing heavy renovations on a property.
Yeah, again, I do think it goes back to how we started our property management and construction management teams. And when we started it, it was purely vertically integrated. So for folks at home, that means that we only would operate and do construction management for our owned assets. If an owner, some other owner would come to us, we would say, no, this is our deal. We only do our own stuff. And a lot of people did come to us because we had a good reputation, and we always turn people away. But we built all these programs and solutions of this vertical integration mindset. So thinking like an owner is how we just do. That's just how we're built. So when we pivoted, don't get me wrong, it was a difficult pivot because being vertically integrated, you can do all things, every single thing one way because it's one owner. Now, when
Right.
you have 50 owners, every owner is a little bit unique. Clearly, some of them have their own reporting, they have their own GL stuff, they have a lot of different things they want to see bespoke to them. To answer the question, like how do we coordinate all this management, property management, construction management, lease up? It's because that's how we had to build our firm. So it carried forward from how it got built.
Okay. And so you guys already had that team built and in place before you ever started offering those services to outside owners.
Exactly. Yeah. We built it for ourselves. We built it obviously with a lot of care because that's one of the ways we thought we had alpha. And I think we did have alpha, operational alpha. There's buy side alpha. You can differentiate yourself in the marketplace based on how well you buy and or maybe when you buy and what kind of debt you put on it. But there's also operational alpha. Can you execute better than the person down the street? And then that's what we seek to do to give to our owners. We want to serve owners so they get operational alpha. So they're beating their submarket.
Yeah. And so my next question would be then, what was that point where you knew that you were ready to go outside of just the properties that you own and you made a decision that we are going to offer these services to others? What was the impetus for that?
It was really a decision. Our strategic choice was and decision was a really big pivot because we had a very well regarded deal acquisition kind of private equity, the buy side the machinery of that was very well regarded throughout Florida and Texas. And people knew we can close on deals, we can execute well. But we decided to sell. And first we decided to stop buying because the idea was like it just got super frothy. Now, looking back in hindsight, we could have timed everything to sell exactly right the day before rates increased. But thematically, yeah, I think we called it very well, which was pricing had just got so frothy in Florida and Texas. So many groups had shown up to do the play that we had already been doing for 8 or 9 years. And we just said, you know what? Now is a good time to be net sellers. So we actually sold a billion, 1.5 billion of our portfolio deal by deal, not in one asset's like portfolio sale, but actually deal by deal. So it took a long time. And we looked at it from a strategic standpoint, just whiteboarded for many days, had debates and this and that. But we love property management. That's what we decided. We love property management. And we knew that the property management team couldn't stay together if it was only serving a couple thousand, 3,000, 4,000, and that kind of diminished over time. So in order to grow it back up, it needed to go out and pivot and become a provider to third-party owners. So it really happened out of that strategic choice. And then the next strategic pivot was, okay, let's build up that capability of third-party provider.
Yeah, that's awesome. And obviously, a lot of times owners talk about the issues that they have with property management challenges, I'll say. But I want to hear from your perspective. What are the challenges that you guys face in your business generally? And if there's anything specific to the environment right now, what challenges you're seeing there?
There's a lot. I would say one of my favorite quotes is like the biggest illusion around communication is that it actually took place. So the key thing is if you don't know the owner's business plan, if you don't really know it deep down, because sometimes you can even have it on paper and have a weekly call, but for whatever reason that communication didn't really happen. And so you have to, first of all, get on the exact same page as the owner because you're their agent at the end of the day. You have to execute what they want. And you can give advice and tell them, hey, do this versus that, but you really have to let them be in the driver's seat to the extent that they want to. So first of all, understand their business plan. What are they trying to achieve? Is it a refi, like in the case we've talked about? Or is it a sale? Or is it like a hold forever? Start from there. And then really, okay, how do I execute the business plan based on that backward design from that? I think that's a key thing I've seen a lot of groups get wrong. I think we're getting very good at that. And then the other big thing is it's people business, and just finding the right people and retaining them. Very difficult in our business. I think the average attrition rate in our business is like 75%. That means most people are churning out of your business. We're beating that as a team, and we focus a lot on that. Actually, we're driving some of the comp programs for our team to actually increase retention of our teammates because that's very jolting for an owner. And it's also bad for our team because if you're on this treadmill of constantly like retraining, hiring new people, it's very costly. And then you can't focus on the owner's asset. So we want to always be beating the industry benchmark there. And then I think great things happen from there because that's just also baked into that is that you've hired good people. Because if you didn't, you would be firing them.
Yeah.
Right.
And so from what I'm hearing from you, communication and understanding the owner's intent, their plan for the property are two of the biggest keys there.
Yeah, those would be the biggest keys. And then from our standpoint as a team, as a property management company, a property management firm, I think it's all about people, retention, building culture, being the kind of place where people seek you out and they say, wow, that's an amazing team. I've heard nothing but great things about you guys. I want to be part of that.
Yeah,
You
and
know,
let me
so
ask you, we as owners, what do you wish that we would do more of or do differently that you think would just help improve the performance of the property or help you help us, as it were?
wow, that's a good one. It's probably different by owner. It's
Mm,
the personality of the owner is very different across the board. Some are really hands off, like surprisingly so, and
yeah.
some are like if you go to the site and visit your team, they know the owner by name. The owner is smoking cigars out in the back patio overlooking the lake because this is his baby. That's his baby. He's just there all the time, and he loves mixing it up with the teams. I don't know. I think it's tell us how you want to be served. Is your goal to be hands off on this deal? And we just send you wonderful reports and everything. You're always beating NOI and you're loving life. And the less amount of time you have to spend on that, you can go spend on your next deal. Is that your goal? Or do you want to be like an active every week I'm on the call, I'm diving in, and then every month I'm visiting the property. Every week I'm visiting. Who knows? Some people, it's in their backyard. I don't know. Does that make sense? Like, how do you want to be served? I think that's a good conversation.
Yeah, and I think you're right. Like every owner is different. Like you said, when it comes to their expectations, their desired level of involvement, which I think is what you were getting at.
Hmm.
So you probably have to take it on a case by case basis.
Yeah.
What about incentivizing desired level of involvement? As you talked about turnover, and that is a huge issue, like you said, not just for you, but also for us as owners, because just that, like having continuity makes everything smooth. Like that's it, in probably any business, but especially a customer facing business like this, where tenants have real relationships with the folks that are on the property, right? They say hi to
Yeah.
them. They go and grab coffee in the lobby, whatever the case may be. They know the names of their dogs.
Mhm.
And if you have those folks leaving every 3 months, a year, that
Yeah.
can be disruptive, not just for you, but for the owners and for the tenants themselves. What are the best ways to retain that top talent on that property?
I do think and I'm going to get back to your other question about how to incentivize them, but I do think the best way to retain them is to build a very strong culture. And that might, some people throw around the word culture, but I've seen it really manifest over so many years now within the business. People need to feel like really connected to a greater goal. If because property management is so difficult, you're going to get yelled at, which isn't funny. You're going to get yelled at. It's a difficult business because no one, very often people are giving you their complaints, right? My roof
Yeah.
caved in because there was a roof leak. That's not the property manager's fault, really, but they have to deal with it and they have to make it better. They have to recover. And so it's a very intense business. It's people's home. So if something goes wrong, their toilet doesn't work, okay, they're going to let you know. And there's no way out. You have to fix it. You have to find a way. So I think burnout can happen in the business.
Yeah.
It's very severe. I've seen it so many times. People get burned out, but so they have to be attached to a broader mission. And that is, we like to try to make it like, all right, this is about service. It's about serving owners, number one, right? But then that's our key customer as a firm. But through the years, we also know we have to talk about serving residents, the importance of having a clean, hospitable, friendly environment, safe. It's got to be safe. So doing a good job, like attaching all that to, you're not just sweeping the floor, you're helping someone go to the moon. That one, like from the
Yeah. Yeah.
NASA thing. Yeah, no, I'm not sweeping the floor. I'm helping bring these guys into space. Like that's attaching someone to that broader thing. And then friendships. Yeah, I think friendships are deep in our business, and getting people off their site, recognizing them if they've done excellent, you recognize them, and then celebrating them and get together with wins with the rest of your region or your regional coming to come see you and giving you some props, holding you accountable when they need to, but having fun too. That's gone a long way in our business, and we're very intentional about it.
No, that's awesome. And you're right. Obviously, people talk a lot about culture, but if you get them to tie what they're doing to a greater mission, then that's huge to keeping people, because
Right.
they will put aside the smaller things in pursuit of that greater mission.
Yeah.
This has been some awesome conversation, but right now we do need to move on to the turbo round. So
Okay.
I'm going to ask you 3 questions that I ask every guest, just looking for a quick, honest answer. You ready?
I'm ready.
All right. First question. What is one red flag every investor should look out for?
I think a short-term mindset
Wow.
is the biggest red flag that I would tell people. And some of this it's revealed if they're like really focused on fees or if they have above market fees. That's very bad. So if someone's investing with our ATX Acquisitions team, we want to make money really only when they make money. So when they do well, we're going to do well. So you have to have that long-term mindset and incentivize and align your interest with the person you're stewarding their capital.
Absolutely, yeah. Alignment of interest is huge. If you see that diverging, that's certainly a red
Run.
flag. Okay, second question. What is a myth about this business that you would like to set straight?
I just wrote about this on LinkedIn where I try to be active, but there's an article in the Wall Street Journal about Brad Sumrock, which I'm not necessarily taking shots on what he's done. I like that he's educated people, but basically he was saying, buy. Everyone needs to buy like today. It's always the best time to buy is today. And I have trouble with that. I don't think that's right. I think you have to be careful about when you buy. I think the time to get active and build your knowledge and think about and start executing toward your goal, which might be real estate ownership, is today. But it doesn't necessarily mean, oh, you have to go buy something this very moment, because then people get deal heat and they get in trouble.
Some incentive
Right.
for that person who's saying buy now.
Yeah, you nailed it.
All right, last question. What does success look like to you?
I think that we're living our mission, which one way we say it is elevating humanity. And so in everything we do, right? So if we're stewarding capital, that investor they've slept very well, we've aligned our interests with them, they can enjoy their life and just trust that we're always going to do the right thing. And we're going to give them great returns. If it's an owner of an asset like you, that same thing. We've tried to align our team with what you want to achieve, and we've gone above and beyond whatever we thought was humanly possible. We've done it all for you. And then everything else, like residents are living a good life. When they're near us, we wave to them, we smile. So just elevating humanity in the small things and the bigger things, I think that's successful, or that is success to me.
True for property managers and property owners. We need to remember that, yeah, these are properties, but there's real people, real families living in these properties, and not lose sight of that.
That's
All
right.
right, Dan. Hey, I have really appreciated you coming on and giving that property management perspective, which I truly think is lacking, at least in this podcast space. So I want to thank you for coming on. Please tell our listeners how they can get a hold of you and if there's anything else that you'd like to share with them.
Yeah, I always give out my cell phone number. And people have hit me up on a few podcasts and straight up like texting me. So feel free if you want to just chat or trade ideas or what have you, or if we can serve you as in one of our businesses. But it's 845-629-1808. Text me, call me. I try to be active on LinkedIn, so would love to interact with you there or check out what I'm posting about or DM me there. And then if ResProp can serve you, if you're an owner of an asset and maybe you're buying a new one or you don't like your group now, we'd love to talk to you and see if we can serve you. And ATX is buying deals. So if you're an investor in LP, look at atxacquisitions.com.
We'll have all that information in the show notes. Dan, again, appreciate you coming on, and I look forward to continuing to see you do big things on your journey to multifamily millions.
You as well. Thank you.
Take care.